Hi guys, so today on the show we have someone who truly understands what it takes to scale and support businesses from the ground up. Mr. Chandrashekar Kupperi is a seasoned finance professional, angel investor, and entrepreneur with over 2 decades of experience across industries like FMCG, oil and gas, insurance, and investment banking. He is the founder of Anuva Corporate Services, an advisory firm specializing in mergers, acquisitions, and strategic fundraising for businesses. He has worked with global giants like ExxonMobil, KPMG, and Lornamead Group, where he served as Group Finance Director for brands like Yardley of London. But beyond the boardroom, he is also a general partner at Peaceful Progress, a SEBI registered angel fund, and has personally invested in more than 30 early stage startups. His passion lies in guiding founders, especially in consumer tech, D2C, and mobility spaces. He is also a mentor at several top institutions and startup accelerators, including SPJIMR's Wise Innovation Studio. His insights on funding, scaling, and financial strategy are gold for any entrepreneur looking to raise funds for their business or looking to grow smartly and sustainably. Get ready for a deep dive into the mind of someone who's not just built businesses but helps others build theirs. How are you, sir?
First of all, thank you, Mustafa, for the generous introduction. Grateful for giving me the opportunity to be part of your podcast. Things are going good, so very happy, to be a part of this show.
Okay, nice. So tell us about yourself, sir. So where are you from? What did you study? Where your work experience?
This question is very revealing in the sense, revealing about my age also. Okay. So let me tell you my background. I started, my career at least 3 decades back. Okay, so started, with ExxonMobil, and then from there I moved to KPMG, and my last stint was with Yardley of London. And very interesting, sort of career, because when I qualified as a chartered accountant, I had the option of joining a Big Four or ExxonMobil. I chose the industry, and ExxonMobil gave me the length and breadth of understanding transactions because I was a fresher. I joined them as a management, graduate, and then grew up the rungs of the ladder in terms of understanding what is financial planning, what is taxation, how do you look at forecasting in a much more effective way, how do you look at consolidation. But I think what gave me a much better flair is understanding even US GAAP. Okay. I was also part of an M&A transaction there. So after a 4.5 year stint with ExxonMobil, the US GAAP fascination made me join KPMG. But after a certain period of time, I realized that US GAAP is more of disclosure, and once you are sort of used to it, again the industry became my fascination, and then joined Yardley of London. Yardley was just one of the brands, as you rightly said in the intro. The group is called Lornamead Group, and this group had almost 40 brands, and I was responsible for doing 11 acquisitions and 4 divestments. So that gave me significant experience because I was dealing with a lot of investment bankers. I was dealing with venture capital firms, with private equity guys, with hedge funds. But interestingly, I was dealing with a lot of law firms also. And I think that's where I truly understood how do you structure a transaction. Because it's so easy to say, that you're part of M&A, mergers and acquisition. But I think until you know how to close it, or sometimes even know how to say no, I think, you're not progressing. So I think the transaction and interaction, that I had with all these, the co-partners helped me a lot to understand the space better. And after 17 years of corporate experience, sold the business where I was working to Lee and Fung. Lee and Fung is a $25 billion group. Did a 6 months transition. The entrepreneurial bug bit me, and that's how my business called Anuva started in June 2013. So it's now 12 years of running this business called Anuva. Anuva is largely an advisory firm, and our focus happens to be M&A, obviously because of my past experience. But then we are also into fundraise, both for MSME and startups. We are also into business valuation. We also do due diligence, which is focused largely on financial areas, commercial areas, and regulatory areas. And very selectively, we are working with few MSMEs to help them on their financial discipline so that they can get better funding, or they can, be a much more better candidate even to get acquired, or probably even think of going for an IPO. So that's the role I've been doing in Anuva.
Okay.
3.5 years back, Mustafa, I started a fund called Peaceful Progress, along with 3 more general partners. So we have 4 of us. And the fund basically invests only in startup. And the focus of the fund is largely technology, consumer, and mobility startups. And we have done so far 24 investments. 7 years back, became crazy, became an angel investor. So I've invested in more than 30 odd startups in 9 funds also. So that's been the journey in terms of my career.
So was there a specific turning point or moment in your career where things started to scale massively?
So why did I get into entrepreneurship? Let me first give that background so that it helps even to understand were there any turning points. I think in life I've always realized that after having gained all this experience, entrepreneurship is one important element that one needs to pursue because it gives you a better perspective in terms of how you look at your customers, how you look at your progress, how you generally look at your professional and personal journey. Let me explain that. When it comes to entrepreneurship, we all know that when you run a business, there are delayed payments. Could even be sometimes a bad debts. You have to struggle with working capital. Sometimes you may make an incorrect choice on an employee. You have to manage the customer expectation. Sometimes regulatory changes could also bring about a change in the business. But then I realized that if you have to progress in life, these are some of the calculated risks that helps you become better. And I'm saying this because I'm a huge fan of Jeff Bezos of Amazon. And Jeff Bezos beautifully said that he would not regret if he failed, but he would always regret if he did not try. So I used to tell myself that don't be afraid to fail, be afraid not to try, because the very important aspect of life is all about trying and succeeding, which means it is okay to fail, but I think it is always better to pursue a passion that you're really keen about going ahead with. And I've always told myself that most of our life's failure is because of the failure to understand that we were so closer to success, but we didn't realize it, and then we gave up. And I think the greatest weakness all of us have is this habit of giving up. So I told myself that I should always make an effort to pursue my dreams, and entrepreneurship was one of the dreams that I had. So June 2013 is when it sort of ignited to become an entrepreneur. You also asked a very important question: what was the turning point? Mustafa, I must tell you this: I think success speaks louder. Well done is always better than well said. So I've always told myself that unless you succeed, in life, people don't look up to you. So one of the things which I relentlessly pursued because of the experience I gained in my career is how do I finish transactions in a much more better way. And I realized that finishing transactions is where I'm going to get noticed. So I always tell that credibility opens doors for larger opportunities and probably even for a broader network. And probably that's what happened to me when I finished transactions. And what that did is it also taught me perseverance. It also gave me this habit of having attention to details, but more importantly, building relationship. I think one of the important skills that one needs to know as an entrepreneur is how do you build relationship with people, because that's the most important skill that one needs to have. Having done that, I also realized over a period of time that to get something that we have never had, we have to do something we have never done. And I think entrepreneurship gives you that benefit of trying something new. And I told myself that if I somewhere do my best to succeed there, I think things will fall my way. Why am I saying this is most of us, unfortunately, we have this fear, of failure. And sometimes the fear of failure doesn't give us that inertia to even, take the next step. And I used to, tell myself, because I read the statement somewhere, the statement is so beautiful. It says, I don't think I can, comes from a deeper feeling that I don't think I am. So sometimes, we are low on confidence, and we are low in confidence because of our own making. It's not from outside. So it's not the difficulties that defeat us. It is a lack of confidence that we have in ourselves that is defeating us. So I had a different mantra for this. I used to say that, confidence comes not from always being right, but not, fearing to be wrong. I think sometimes, it's okay to make a decision and then correct it. That's a better way of approaching life. And that, I think, became a turning point for me to pursue the entrepreneurship in a much more better way. I know, go courageously and tell people that don't take entrepreneurship as a burden, but take it as an adventure, because that's how you're going to grow.
So you worked in companies like KPMG and ExxonMobil. How did those experiences help you when you started your own venture?
I think working from KPMG, ExxonMobil, Yardley of London, the group, I think what it does is it gives you, the ability to understand process. It helps you understand, how you appreciate, why there are certain rules and procedures. And I personally have believed in the statement that where there is process excellence, there will be excellence in results. So I think I call that as a foundation because a tree does not stand on the strength of its stem. It always stands on the strength of its roots. Deeper the roots, obviously taller, stronger, broader the tree. I think that is what I believed, has happened for myself also. The career with ExxonMobil, KPMG, the likes of, Lornamead Group has helped me to understand, that how you appreciate, certain operating procedures. How do you ensure that you are religious to that so that you're able to bring the best out of the team as well as the best out of yourself. So one thing I've realized in this whole process is that if your foundation is strong, probably you are much more better in bringing out your edge in a better way because of the learning that you have had, the experience that you have had. You're able to empathize, but I think you also become great in in your execution capability. Okay. I always say that we all know, but I think the ability to do is more important, and I think that execution capability comes when you have experience with companies of these sort. And once you have that experience, I always say that what you vividly imagine, ardently desire, sincerely believe in, and enthusiastically act upon must inevitably come to you. So I think that's how I believe it has happened to me. So I'm very, very grateful that I had experience in these amazing companies. I mean, KPMG is one of the best big four that you can aim for. ExxonMobil used to be one of the best oil and gas companies. So Lornamead gave me an excellent opportunity in terms of how we look at M&A much more deeper. So grateful for all that in terms of what I gained. So let's talk about startup investment and opportunities. You've invested in 30 plus startups. Can you share some of the most exciting or successful ones and what made you believe in them? Mustafa, there are many. Otherwise, I wouldn't have pursued this journey. In fact, I continue to invest. I continue to invest via funds also. But since you asked for one, without naming the startup, let me name the segment and what they have done. Yeah. So this startup is in a healthcare space. And healthcare, is not very easy because until you get your trials done effectively, until you reach certain milestone in terms of how efficacious, your product or service is, it doesn't get the attention from the customers. So this is a healthcare company which is in the diagnostic space, and the beauty is that that they were coming with a non-invasive diagnostics, more on the preventive side, and they just had this ability to look at how the blood circulation was of a person in a non-invasive way, and they were able to tell what sort of ailments the person was going through, including the family history in terms of what has been the reason for certain ailments that the person has. But more importantly, it was also able to use AI/ML to even suggest what are the possible options to ensure that some of these ailments could be cured better, or what are the better ways by which the habits should change so that the person is able to get the better of the ailments. And I think such startups are quite rare in terms of how they can blend a non-invasive technique along with technology to ensure that they're able to bring the best. So this is one of the startups which I'm always very proud of. Okay. Okay. Could you walk us through the exact process, how entrepreneurs approach you, how do they pitch, and is it the founder you invest in or the business? It's a very interesting question because I've always believed, that before I even bet on the founder, okay, I basically want to understand whether they've got the problem solution fit right. Okay. And I call it as a PS fit. What I mean by the PS fit is if a problem is well understood, if the founders have gone deeper, I believe that they'll be having the tenacity to come up with a solution in a much more effective way. I always say that a problem well defined is a problem half solved. So one of the requests I make to the founders whenever I discuss with them is how deeper have they gone? Is the problem popular? Is it urgent? Is it growing? Is it expensive? Is it mandatory? Because if these are some of the traits that they find, then probably they'll also be able to understand that there is an ability for that many customers to be there for them to service. Therefore, one of the important criteria I have is a PS fit, what I call as a problem solution fit. You're right. Then comes the founder market fit. I really, want to bet on the founders. We always have this famous term saying that we bet on the jockey than the horse. So the founder is very, very important for us. But when we look at the founder market, we're basically looking at not just the domain knowledge. We also want to ensure that the founder has got great leadership capability, because that leadership capability means that they'll be able to build a team. They'll be able to face the challenges in a much more effective way, and because they're able to overcome the challenges, they'll have that resistance and the persistence to ensure that they they progress better. The third is very important, which is the product market fit. So we started with the PS fit, what I call as a problem solution. Then we came to the founder market, which is very important. And the third is the product and the market. What is product market fit? Product market fit is basically telling us whether the founders are building the right product which solves the customer's problem. Because if the customer's problem is not solved, what's the point of even building that product? So I always say that it is absolute waste of time just building a product if you don't know how to service the customer.
Okay. Walk us through your most memorable or best startup investing experience. How did the founders approach you? How was their pitch? What did they do good? What could they have done better?
Rather than citing a specific example, let me share in terms of how I evaluate a startup.
Okay.
Probably this would be useful, even for the startups, to sort of get through a few brownie points.
Yeah.
I think I have a framework, what I call as a 4M framework.
Okay.
And the idea of 4M framework is basically to say that have the founders truly understood the market? Have they understood the model? Are they very clear in terms of how they want to manage? So the management, that's the third M. And finally, momentum, in terms of how they are progressing. So let me come with the first M, which is the market. I always believe that if there is a large and favorable market, I think that helps the startup in terms of looking at scaling. What I mean by large and favorable market, this is where the market sizing is very important. I'm sure you would have heard of this concepts like TAM, SAM, SOM.
Yes.
Whenever somebody reads marketing, it's the targetable, addressable market, the serviceable, available market, the serviceable, obtainable market. But I always say that more than this, the guys need to have the magic of thinking big. Do they know that there is a significant market that they are entering into so that they can become better? Nelson Mandela said something so beautiful, and ever since I read that statement, it's etched into my mind. The statement is so beautiful. Nelson Mandela used to say that there is no passion to be found playing small in settling for a life that is less than the one that you're capable of living. Why am I even making this statement and startup? I think the startup should realize that they have to have the magic of thinking big. They're capable in terms of coming up with a much bigger, idea, a much bigger customer base, and that should be the way they should be thinking. Because if they think small, they will only have a smaller customer base, and that's not going to benefit. So the first is the large and the favorable market that they need to look at. The second is, are there specific customers with real needs? So you have to find, is there a real need? Because if you just build a product, but you're not able to find a customer, then I think it is waste of time. So the biggest waste of time, money, and resources building something that nobody wants. And therefore, the most important aspect to be done is, so the most important thing that the founders need to do is, they'll have to really, really find out are their customers. I used to love what Ritesh Agarwal of Oyorum said. He said once beautifully that it is very important to build something that 1,000 people love using rather than 10,000 people simply liking it. And I think if you are able to find users for your product, that is very important, and simply the likes that you get for the product. So that is the very important aspect of market. And in that market, once you have understood that there is a large and favorable market, there are specific customers with real needs, you'll be able to come with a competitive positioning. And the competitive positioning is very, very important. And finally, of course, you have to look at the trends, because sometimes, I always say that, you have to follow the leader. So if there is a trend, follow the leader, otherwise work harder, to ensure that you're able to make the best out of it. I have the statement, the harder you work, the luckier you get. So that's even possible, in a market. The second M is very interesting because it's the model. What is model? I always say that ideas never fail. It's the business model that fails. So can we keep revisiting the business model so that we are able to become better at it? In the world of startup, there is a word for it. It's called pivot. What is iteration? So how many times can you iterate so that you're becoming better in terms of what you want to offer? And I think once you understand your business model better, you'll be able to offer something which is very, very competitive, which means there will be a distinctive edge. And that is what most of us are looking for. The second aspect of model is the go to the market strategy. Because if the business is not omni-channel, if the business is not able to get customers from across different channels, of course you begin with one or two, but how competitive you are in terms of even ensuring revenues come from different channels will define the model itself. The third is very, very important. It's called profitable monetization, because we all know startups are at losses as they begin the journey, but they can't be losses, for a longer time. Because then, it doesn't make sense, to have started that particular venture. So we have this statement as finance guys. We always say that sales is vanity, profit is sanity, but cash flow is reality. Which means after some time, you have to ensure that after a 3-year or a 4-year, you make a break-even situation of the business, and then you get to the path to the profitability. That is what is very, very important in the model. And finally, if you look at the model, you need to have the scalability as well as the defensibility, which means how closely you're monitoring your competitors so that you can get the better of the competitors. The third M is closer to my heart because it's management. End of the day, I always say that teamwork makes the dream work. So it is people, who define. And therefore, when it comes to management, it's all about, how skilled the people are, how efficient they are. But at the same time, they should be ready to go big when it demands. And this is where, I always say that the team should be able to learn how to do rather than simply telling us how it can be done. That's why I said in the beginning, that well done is always better than well said. Showing is always better than saying. So one of the requests that I always make to the founders as a management team is that, number one, build the team, have the domain knowledge, but at the same time, ensure that you're cohesive, because that is very, very important to demonstrate to us that you will have that resistance. You'll have that power to come back, whenever things also go wrong, because that's what life is all about, right? It's a yo-yo curve. Things will not always go the way that we want. And that M to me is very important in terms of, how profound the management is. And finally, I'm a Pakka finance guy, so momentum. What I mean by momentum is the startup founder should have cracked something, which means show us some traction. Show us, that you are able to progress, you're able to move. There is a movement. That is what we are looking for. The second aspect of, the momentum itself is that there must be a credible business plan. Because one of the biggest worry that we have as investors is a lot of people come and show us some hockey stick growth. It's nice to see that, but somewhere we believe, that it is just, not a real, credible story. So I think a credible business plan is very, very important. The third important aspect within this momentum is that, can you have a business model which is capital efficient? Which means, you don't need to have too much of capex, because a heavy capex-led business model sometimes, could be quite dangerous, for the startup, because raising next money could become difficult. So a capital less intensive is far better than a high capex model. And finally, I'm a fan of corporate governance. So I always tell the startups, that be disciplined on the corporate governance aspects, whether it is tax matters or, some of the regulatory aspects, because that is what is also going to show how good you are on the momentum. So this is how I evaluate what I call as a 4M framework. First is the market, second is the model, third is the management, and the fourth is the momentum.
So have you come across a founder who's got all the 4 M's, and if yes, could you walk us through that pitch?
So Mustafa, never the 4 M's, will be in the same proportion. So what happens is that, sometimes, as I said, if they have cracked the problem solution and you're able to believe in the founder and the understanding of the market, and then you have this conviction that there is a product market fit, I think sometimes I say that, you'll have to, take that calculated risk. So for me, management is very important. I give a lot of weightage to it. Momentum is important because it shows me that the founders have got the confidence to even show what they are doing. For me, the model is again very, very important, because I want them to even, iterate or pivot if they see that things could be done better. And of course, Market is crucial, because if you don't understand that the market has to be large, if you don't understand that there must be specific customers with real needs, then I think you're not capable of running the startup. So I wouldn't say that I can give equal weightage to them. It differs from startup to startup. But trust me, the forum framework has helped me, to at least go ahead and invest. And I'm able to see, a better way of, the startups running the show also. And I've also, had some returns, profitable returns. So that is the, end game.
Okay. How should a 20-year-old who has an idea approach a VC or an investor? So from approaching to getting funding, could you walk us through all the steps?
So let me share, the answer in a much more different way, because you're speaking about a 20-year-old, which means somebody, who is a fresher, who wants to think of a startup, and therefore the person has got an idea. I would first begin by, telling the person that pick your passion. Okay, you should exhibit that you're very, very passionate about what you have chosen as an idea. The second is, you should give us the confidence that you are entering the dragon. Have you seen the Bruce Lee movie, Enter the Dragon? So which means, you have to ensure that you plunge. So you can't be a cat on the wall. A 20-year-old, if has got a great idea, should first begin with picking that passion, and then you should enter it, which means you should plunge. But more importantly, once you've done that, you should be able to even explain to us how some of these negative things, that the person has heard, they're able to nullify it and even progress better. Which means, are they able to show us the effort that they can scale, even if, there are negative connotations that they're hearing, from the outside world. Because that shows that they have got that tenacity for them, to sort of become better in terms of, what they have started. More importantly, they should have the risk-taking ability, because that's where the execution skill comes. I always say that idea is not always important. What is important is the ability to execute the idea. Which means it is not in the idea that success lies, it is always in the execution. And therefore, the risk-taking ability also gives me the confidence that there is this power inside, to even execute, the idea. But more importantly, the resourcefulness of the founder is very important, because you may not have all the resources. For example, the biggest issue with a startup is, the startup always has limited time, money, resources. And within that limited time, money, resources, the startup has to somehow survive, figure out how to move ahead before the resources run out. So I think it's very important in terms of how resourceful the founder is, because that, if I see in a 20-year-old, I'll be super excited, I'll be honest with you. The next, in terms of understanding whether the 20-year-old founder is the right direction, is for me to sort of know the vision of what this 20-year-old has got. Because I believe that if somebody has got that vision, and then the person is able to add action to the vision, I think it's an unbeatable combination. And therefore, I would love to hear how the vision is expressed, for me to even get the confidence in the 20-year-old's idea and the execution capability. But more importantly, I would love even for the founder to tell us how they would want to even network with us and see what other benefits can an investor provide to them. Rather than just the capital, if they're looking at a network benefit, and if they want some of the other benefits that can come along with the money, that would super excite us. So these are some of the qualities that I would want to look at a 20-year-old.
What are the biggest mistakes you see founders make when pitching their startup ideas?
I think the bigger mistakes I've seen is lack of focus. When what I mean by lack of focus is they are into multiple things, and that sometimes worries us a lot. So one of the requests that we have always made to the founder is, if you chase two rabbits, you will catch none, and therefore be very, very focused in terms of what you are wanting to do, and ensure that you are able to spend significant time. Be happy if it is 100% time in what the founder wants to do. So that is one. The second that we have seen as a mistake is inadequate financial planning. What I mean by that is, if you have to raise money, you need to understand that you have to come and show us a business model, which means you're showing us a plan. Now, there's a beautiful statement which goes like this: failing to plan is planning to fail. So which means a plan is basically telling us how well the founder has thought through about the future. Now, we are not fans of the plan. I'll also admit this because I always say that a plan is a useless product, but a very, very priceless process. What I mean by that is only when you go through a plan, you realize, what sort of resources you need, what are the limitations on the resources. Therefore, within the constraints, how well you can execute that. So, inadequate financial planning is one of the other, sort of negatives, that I see in the founders, which sometimes, deters us from investing in them. The other thing that we see is their inability to understand the market and the competition. They're smart, but sometimes they think, that they are better off the competition and therefore they ignore even looking at the competition. Now, to me, competition is not just direct competitors, it's also indirect competitors. And therefore, if they are not able to understand that competition is lurking around the corner and it could be even indirect, then that worries us a lot. And then one of the big concerns, I've seen about founders is they sometimes overlook the scalability. They think scalability is something that will happen naturally. No, it doesn't happen naturally. Scalability is one of the most difficult aspects in the world of startup. So we always want the startups to ensure that they look at scalability all the time, which means they need to look in terms of what are the various go to the market strategy to ensure that they are able to garner revenues. But more importantly, if they can ensure that they even go on a strategic partnership mode to ensure that they gain better business, I think we would love that. And finally, if I have to say one of the other lacuna that we see in the world of startup, I think the biggest concern sometimes we have is that sometimes the startups even ignore the capability of building a team. What I mean by ignore is that sometimes the founders think that they are capable of handling the multiple functions. Now, that's not a bad thing because multitasking is a very good quality, is what I personally believe. But then I think all of us have certain expertise in certain domains, and I think we should stick to it. And therefore, building a capable team, if is ignored, that to me is a red flag. So these are some of the issues that I see in terms of how the startup founders lose out on this. And if I have to sort of summarize what I'm trying to suggest, if there is lack of clarity, if there is an unrealistic plan, if if they ignore competition, oh, trust me, these are some of the aspects that makes us much more nervous about even approaching the startup world.
So, are there any underrated or billion-dollar startup opportunities in India or globally that young people should explore?
I'll try and rephrase this answer by saying, what are the sectors that I think, are more relevant in today's era. If I have to begin with the first, to me, it is the sustainable and purpose-driven businesses. Because, there are socially conscious consumers today. And I think reaching out to them, getting their attention is very, very important for the startups to scale up in a much more better way. And I say this because sustainability in the older times was about doing less harm. But today, sustainability is all about doing greater good. And I think ESG, and the SDG goals are becoming much more popular. And therefore, there are funds which are very focused in terms of impact. And therefore, if there are certain startups which are largely looking on sustainable and purpose-driven businesses, I think that's a huge plus. I will always say this. Sustainability is not about ticking the box because unfortunately, the corporate world thinks, it's about just ticking the box. I think to me, sustainability is about creating a positive impact that can transcend generations. I think there is a huge opportunity that is there, in terms of creating sustainable opportunities. And what are the opportunities that are lying around? One is the renewable energy. Second is the sustainable supply chain itself. You've got the green buildings. You've got waste management. You've got, the water, resources to be used effectively because there is always this issue in terms of scarcity of water. So I think look at the plethora of areas that lie around. So sustainability to me, is a very, very important, aspect that founders should look at. The second is health and wellness. And if you can also bring a tech angle to it, that is fantastic. So what I mean by health and wellness, I think the world is changing largely in terms of personalization, in terms of accessibility, in terms of convenience. We want things at the doorstep. And it's happening in healthcare also. That's why telemedicine is becoming popular. That is why you see even medicines, being, dropped at home, via different, startups. What I'm trying to tell you is that convenience, accessibility, and personalization has been the order of the day. And if some of the startups can focus on this area from a health and wellness angle, and if they can bring a tech angle to it, I think it can be a significant, movement. Finally, I will speak about AI ML because you can't do away with AI ML. So, what is artificial intelligence, or what is even this machine learning? I think today's artificial intelligence is all about completing the task. That's what AI is meant to be. But it can't last for long. It's getting boring. In fact, AI has become a very generic term now. I think what will be the mainstay is the artificial general intelligence, which is about learning, which means can the machine start performing? Can they start thinking? And therefore, can they start learning and therefore doing better? So I think learning, performing, thinking, if the systems can start doing it, that's going to bring a significant difference. And this is what we call as artificial general intelligence. The next phase is going to be super AI. Super AI is all about surpassing even the human expectations. And I think this is something that is also highly capable. What I'm trying to tell you is that artificial intelligence can never substitute the human intelligence. But I've always believed that artificial intelligence can amplify our human creativity. And therefore, we need AI, we need ML, because it makes us better in terms of what we can do. And if some startups can come in the third area of AI ML, that would be fantastic. Just to summarize, what I'm talking about, how startups should look at it. I think the startup should always, stay agile. They should stay adaptable. I will again say this: they should be ready to pivot if the trend emerges for them to pivot. The second thing is they should focus in terms of coming up with real solutions, so that they're able to bring solutions to some pressing issues. I think that will be a huge difference. The third is they should embrace technology and innovation, having the business strategy as a core. So it can't be on the sidelines. It has to become the core. And finally, as I said, if they can prioritize sustainability, which I said in the beginning, if they can prioritize inclusivity, and if they can be socially responsible, I think then the startups are adding a lot of meaning to the current era.
So, what sectors are you currently bullish on when it comes to early stage investing? Is it AI, EVs, space tech, or something else?
So, because in the previous answer, I said that AI ML is a focus. It's also a focus for us. And we're also looking in terms of deep learning, and therefore, we are also looking at deep tech startups, because that's where I believe, there's going to be a significant differentiation that's going to come. Of course, the deep tech startups will take time in terms of becoming profitable. But I believe, some of us have got that patience. And therefore, if the patient capital can attract the deep tech startups, it'll be good, for the economy also. Because some of the startups are doing something which is very, very incredible in terms of solving the problems. The second area that we're looking at is space tech also, because today, after the government, has liberalized some of these policies, I think space tech is one interesting segment that we are looking in terms of opportunities. As a fund, we have not invested in space tech, but in my personal investments, I do have a couple of space tech investments. I'm also part of Agnikul, which is one of the charm of this nation, and thankfully, it is also from Chennai, and therefore it's a mark of great happiness for all of us. What I'm trying to tell you is that today's space tech has become so different that you have startups which are trying to solve problems like why should there be a fuel which is very combustible. So why can't I bring an organic fuel? Why can't I bring a fuel which is good for the environment? Why can't I think in terms of preventing the collision of satellites that happen, because as that causes debris. So that's another area. Why can't I bring even this electric vehicle, sort of a spaceship, that can take, the satellites into the space? Why can't I think in terms of, data being managed better via satellites? So look at some of the use cases, which are coming up, which are very, very differentiated. And I think this is what, keeps us super excited. I'll also say the same thing about drones, because today drones are not just used for agricultural precision, but probably, in the defense. The drones are going to be used, much more effectively. And probably the drones can also help on surveillance on some of the other aspects. Therefore, these new age, sort of startups which are in the field of AI, ML, space tech, drone, or something which are totally exciting for us. But I will not miss on the sustainability. As I said, if a startup is there in the sustainable space, if they're able to be socially responsible, if they're able to attract the social conscious customers, we would again be super excited about those.
Okay. So how can someone with just 5,000 or 10,000 rupees start a real business in India today?
I think more than the quantum of the money, I think what I would request the founders or entrepreneurs to look at is, can they create a scalable, sustainable business with strong fundamentals?
Okay.
I'll repeat that again. Can they create a scalable, sustainable business with strong fundamentals? Because if you're able to have the strong fundamentals and if the business is sustainable, trust me, you'll be able to reinvest the monies that the business is able to generate.
Okay.
Of course, initially you may have to bootstrap, you may have to rely on friends and families, you may even want to rely on some early stage venture capital firms. But what I'm saying is that if it is scalable, sustainable, you'll be able to find a way out. That's first, very important principle. The second for me is that patience is required, which means the founders, the entrepreneurs, should be even ready to pivot, should be ready to adapt if the changing circumstances want them to do it.
Okay.
So patience and the ability to adapt. That's the second one that I would want to say as an important tool, an important focus that they need to have. The third for me is, don't chase the quick wins. Quick wins are important, to show to the investors, that you're able to do better, but you don't chase quick wins. Which means the whole focus is, how do I, look at long-term value creation? That's the name of the game. Okay. Because that's what we also love to see in the founders and the entrepreneurs. And if I have to add one more important aspect, I think I would say that diversify in terms of the revenue streams, because that's where you're going to become better. Because just focusing on one or two, sort of revenue streams, or let's say concentration of customers, is also bad. So diversify the revenue streams, ensure that you're able to reinvest the profits back into the business, but more importantly, be agile even to know what's happening in the outside world. Which means, are you much more adept in terms of even learning what is happening in the latest scenario, so that you're able to embrace that, into the world of startup or the entrepreneurship. Okay. And if I have to add the final one, I would say this with a lot of, happiness. I think it's very important to become a better entrepreneur, a better founder, which means invest in yourself. This is one of the huge mistakes that founders do, entrepreneurs do, because I'm also an entrepreneur, and I keep telling myself that if I invest in myself better, probably I'm becoming better at this game of entrepreneurship. I'm becoming better in terms of the art of how do I run my entrepreneurship. And I think if you invest in yourself, you're not only becoming better, but probably, you're also, becoming quite adept in terms of your ability to network and build relationship. And I think that's the name of the game for an entrepreneur or founder.
Okay. Can you share a time where a startup pitch really impressed you? What was different about it?
I think if you have to, really go to the fundamentals, I would always say that if they told me the problem well, I would, be super excited. That's why I said in the beginning that a problem well defined is a problem half solved. And when I want them to explain the problem, I also want them to explain, in terms of why, they got into it, which means their ability to even share it in the form of a story is very, very important. Because storytelling is again a very, very important aspect of, how you show your passion. And whenever they share a story of that sort, when they explain the problem to us, I think as an investor, it connects, not just the brain, but somewhere the heart and somewhere the gut also. I always say that we all have three brains. One is, your mind, second is your heart, and third is your gut. The mind is always rationally thinking, the heart is always emotionally thinking, and the gut, thinks from instinct. And therefore, when startups have explained their story in terms of how well they understood the problem, and therefore why they came up with an answer, which is a solution, and how well their execution capability was, that always connected with us. That's how I would say is a very important aspect. But you can't just stop there. Then I think the credibility comes. By credibility, what I mean is their own credibility, the founder's credibility, the credibility in terms of even developing the team. because that speaks louder. As I said, if they're able to build the domain expertise across, team members, that shows that, there's a shared responsibility, which means there's a sense of belonging. If there's a sense of belonging, that itself, gives greater comfort to us as investors. Once they have done that, of course, the know-how is very, very important to exhibit. What I mean by exhibit is they should show us the evidence. How is the evidence, depicted even to us? We even tell the founders that why don't you come with a 1 minute, 2 minute video to even tell us, what your product does, what we call even as a product demo. Just show us in the form of a video or show us in the form of a pilot, a POC. Show us, don't tell us. So you can be good in the story, which is telling, but if you have to sell to me, you have to show. So I think that evidence is very important because I always say that, the true tangible expression of what you do is exhibiting your product or service. And the evidence is also in terms of how well you have got the initial customers, what we call as early adopters. And I always tell them that building great products begins with knowing the users. Have you first understood who are your customers? It can even be the evangelist, the early adopters. But that I think is very, very important. And finally, as they are sharing their business with us, I would also want them, to be very specific in terms of what money they want. I always say it should be the ask. It can't be simply an ask. Oh, give me, 500,000 to 700,000. No. It has to be a clear number. Say it is $750,000. And I want this because the utilization is going to be A, B, C, D. I think that precision is something that I'm looking at because that will tell me, the runway of the amount. It'll also tell me in terms of when the business wants to raise the next money. They'll also tell me that if more money is given, can they scale, much more faster. So these are some of the aspects, that I would want to see. It starts with the problem so that they're able to tell me the answer. I need to see the credibility. I need to understand the know-how, but I need to understand the know-how in terms of the evidence, whether it's a product or service, and also understanding the customers. But more importantly, the money that they want, it should be a specific amount with utilization details.
Okay, got it. Now, not all businesses can solve a real problem or have a story. So, what if a person comes to you and tells you that they've found a space where they can enter and build a big business out of it? It can be, a clothing, it can be real estate. So, would you invest in those kind of people? They're not solving a problem, they don't have a story, but they just they have knowledge about it, they're passionate about it, they're really they've got a big ambition and like you said, a big aspirations about it.
So there is always a difference between a startup and a lifestyle business. A startup has got a definition. Startup is defined as a company that can scale quickly. So one of the pressures that the startup has is they also go for this DPIIT registration where they have to be within the 10 years so that they get certain benefits also from the government. The turnover has to be less than 100 crore for even some of the angel funds to invest in them. But then you can also run a lifestyle business. So one of the requests I always make to the founders and entrepreneurs is don't be in this rat race. You have to know what you're cut out for, because if you really ask me, I think it's MSMEs, which are really, taking this country to the next level because their spirit of entrepreneurship has to be, really appreciated. They add 30% of the GDP of the nation. There are more than 6 crore MSMEs. What I'm trying to tell you is that not everything has to be a startup. Yes, we are the third largest in terms of the startup ecosystem in the world. But then that doesn't mean that everybody needs to get to the rat race. So if somebody has got a idea, they have not still cracked, in terms of, is there a real problem? But they are able to show, that they have got the understanding of, why customers, would be willing to choose the product, and they are able to do even some test marketing, what we call as focus group discussions, or let's say, some of, the other ways by which surveys could be done on the marketing side. I think we wouldn't, want to shy away, from looking at, such businesses. So I always differentiate a startup and a business. For me, business is again very, very important because it's not just about trying to be in that race and trying to win the race. It's about winning for the long term. Because it's not a short-term game. To me, entrepreneurship is an adventure. I never say startup is like a destination or entrepreneurship like a destination. It's a journey. And therefore, if the founder, if the entrepreneur is able to depict that to us, I think that would be quite interesting for us.
Okay. What's the toughest business deal you ever worked on, and how did you pull it off?
Very interesting. So let me share something from the M&A space. This was a cross-border transaction, and we had the acquirer and the target speaking to each other. But this was the issue. The issue was target is a company which needs to be acquired. Acquirer is a person who is acquiring the company. The issue with the target was they had a very strong intellectual property, but they had fragmented revenue streams. So when you have a fragmented revenue streams, there's always this doubt in terms of which one can scale faster or scale better. But then the good thing is that revenues were still coming in. Then there was a second problem, which again augmented. The second problem was it was pre-profit, which means it was not profitable. But then it was a strategic fit. So to the acquirer, it was strategically valuable. So when this opportunity came to us, I think the one of the things that I believed, is that I should first focus in terms of building trust, which is what I did. And I told myself, that if somehow, I can reinforce, the conversation in such a way that it was not about the valuation or the price, but it was more focused on the strategic fit, then I think I can keep the parties, much more engaged. Because what was the issue? Valuation was the issue. Why valuation was the issue? Strong IP, but then fragmented revenue streams. Strong IP, but then pre-profit. But then the IP was such a strategically valuable asset. So what we did is we looked at some of the benchmarking exercises to even understand how we can, look at some of the listed companies, some of the precedent transactions that have happened in the space, and then come with certain logic. But then what we beautifully did is we also layered in a milestone-based performance, consideration. What I mean by performance consideration is that if you achieve this milestone, then you'll get this consideration. Otherwise, you'll get a pro rata. I think that strategy was helpful in terms of structuring the deal in such a way that it was protecting the interest of both the parties. And I think this is how you sometimes have to ensure that you're able to apply your mind in such a way that you're able to get the benefit of both the parties agreeing to a particular structure. And I think we were quite lucky in terms of suggesting that. But I'll tell you what truly helped us. Whenever an M&A happens, we always find there's a lot of ego. We call it as hubris. And managing the egos are very, very important. So one of the things that we did well was we brought clarity. We also ensured that that we were able to bring humility into the whole process. And why I speak about the word humility is that I think when you are able to bring that into the process, you're able to tell both the parties that we are hearing both of them. Which means both feel that they are being heard. When that happens, there is much more engagement on the opportunity, on the transaction. And I think what really made the deal completely close was our ability to ensure that there was transparent modeling. We were able to come up with a win-win negotiation tactic. But more importantly, we were also able to succeed, in terms of ensuring that there was a focus on both the parties on the post-acquisition integration. So what happens in an M&A is that it's so easy to say that I've done a transaction, but things fall out after the transaction because both parties are not able to go through the transaction in a smooth way. Ensuring that the post-acquisition integration, if that can go smooth, what we call as transition, then I think there's a larger success, for the M&A to happen, and we were fortunate, that it led to that, and it'll always be, a memorable transaction for me.
What's your strategy when you're selling a company or a brand like you did with Yardley or Lornamead?
I think personally, I've always believed, in terms of, focusing, on carving out a narrative that is, beneficial for both the parties. So let me explain, what I mean by this. I've always believed, that if you have a narrative, which basically blends heritage as well as the future potential, and you have focus in terms of clean metrics and consumer insights, I think that makes both parties much more fascinated towards the opportunity, and that is the first thing I always do. The second thing I do is whenever I prepare the investment memo, I always ensure that no, I'm able to connect both the logic and emotion, because whenever I've done that, I've realized that I'm able to bring out the brand equity, the distribution leverage, and sometimes even the opportunity in a much more effective way. There are these white papers which sometimes discuss where is that opportunity. I think that is something that I've seen is much more efficient to do when you're able to ensure that you're able to connect the logic as well as the emotion. Then once we have done this, I've always believed that you should have a balance between the consideration, which is the money that you want upfront and the money that you want based on performance. What I call as upfront value versus the performance link upside. So how do you sort of balance it? Because that again makes the transaction much more attractive, and you can lure both the parties to get to complete a transaction. But I think what has also made me realize in this whole journey is that I should truly understand why somebody is doing the transaction. So one of the quality that I've developed over a period of time is understanding what the buyer wants. Is the buyer looking at margin enhancement? Is the buyer looking at geography entry? Is the buyer even looking in terms of some of the portfolio synergy? How do I ensure that I'm able to get closer to it is what has made me better at this art of doing transactions. So to summarize, what I'm trying to tell you is that to complete an M&A, what qualities you require is, first is blending the heritage, because a business would have certain longevity with the future potential, which means you just don't look only at the historical, you also look at the future potential and ensure that it is backed up by clean metrics as well as consumer insights. But more importantly, if you are able to come up with investment memorandums, can they connect the logic as well as the emotion? Because once you're able to do that, you'll be able to bring the best of the business. And therefore, if you're able to bring the best of the business, the nextness aspects of structuring, valuation becomes much more easier to discuss. And that's what I've seen, in terms of doing M&A.
Okay. Okay. If someone wants to build generational wealth through business, what's the best path to take in 2025?
If you want to bring a business entity for generations, I think I said this in the beginning, you will have to create a business which is scalable, sustainable, with strong fundamentals. So I'll again repeat that, because to me this is core to my heart. And if you want to bring a business which has to stay for generations, you have to be innovative.
Okay.
So innovation is not something that you just speak. Innovation is something that one should show in action. And therefore, I would never vouch an innovation if I only see that. I'll only vouch an innovation if that is applied.
Okay.
So to me, that application matters a lot. The third aspect, if you have to keep the business for generations, is to ensure that you're very contemporary, which means if there are newer technologies, if there are ways by which the consumer behavior is changing, I think you'll have to sort of look into those more. For example, I said in the beginning that today most consumers are very, very happy for products which are basically meeting their requirements, what we call as personalization. Okay. Sometimes it's a convenience. It has to come to the doorstep. What we call even as accessibility. So I think one has to be watchful of the trends in terms of what's happening in the latest era. And if that happens, probably the business, can last for generations. But more importantly, I think the business has to also ensure that it is profitable, because if you don't reinvest the money into the business will not be known, in larger circle. And if the business is not known in larger circle, it becomes that much difficult in terms of garnering the revenues. So one of the requests to the founders or the entrepreneurs is ensure that you're able to plow back the money into the business, or you should have the ability to even raise money. Because when you raise money from outside, whether it's debt or equity, you're also under pressure in terms of servicing that money that you have raised. But more importantly, it also gives you the discipline. But if you have to really, really build a business for generations, you need to ensure that after a certain period of time, you're able to bring a professional management, what we call as CXOs, because these guys have got the experience of having run businesses, having managed the functions, and therefore they'll be able to add much more better aspects of the business in a faster way. bring also technology in the business in terms of measuring the business. So I always say that if you can't measure, you can't manage. If you can't manage, you can't control. If you can't control, you can't direct. What cannot be directed can never become business. And therefore, technology should also be brought to ensure that you're able to measure the business in a much more better way. And finally, I would also want to say that create layers in such a way that it is not too hierarchical. The layers should be in such a way that no, it is giving the accountability, it is giving the freedom along with the responsibility. Which means if there is a sense of belonging that you're able to imbibe in people, and there is not too much of a domination which is coming, from just the promoters, I think the business can definitely, be there for generations.
Okay, got it. So, how important is mentorship or having the right business circle when you're just starting out?
I think to me, the word mentor is to be understood in a very different way, and I'll tell you why. I think there are a lot of mentors, whom you can come across, but I think to me, mentorship is offering guidance because somebody, is looking for a shoulder to cry, and I think that's why they're looking for mentors, and therefore, for me, I would say that the first thing that should come from such people is guidance.
Okay.
Guide, how well they're able to guide, the founders or the entrepreneurs. That's the first parameter for me. The second is they should offer the network benefit that they have.
Okay.
Because unfortunately, founders and entrepreneurs need to realize that network is the real network.
Yes.
And unfortunately, network is not just connecting with people. Networking is connecting people with people, people with ideas, people with opportunities. I think the mentors, I think they already have seen that, and therefore, if the founders and entrepreneurs can exploit, and let me use the word exploit in a better way, the network that the mentors have, I think that would be beneficial.
Okay.
The third aspect is mentors can definitely help in terms of the next fundraise. So never miss out on that opportunity because they would have certain connects with the VC world, or let's say the angels or HNIs or even the private equity guys, or even let's say strategic funding. So why miss that opportunity? The next important aspect is that always, speak to the mentors and try to understand about the market because probably you may get a different view. And I think the market access or understanding the market better is one quality that I think mentors, can bring, much more effectively. And that's something, that the startup founders, entrepreneurs should look at. And finally, I would always say that business goes through crisis. I think mentors are great at handling crisis management. And therefore, whenever a founder, entrepreneur goes through issue, never shy away from connecting immediately, with the coach or the mentor or the guide. Share what you're going through because probably the experience and the expertise that they have can help to fix it much more sooner.
Okay. If you were 18 today, what type of startup will you build first and why?
Because we're speaking about today, okay, I'll have to go back, to my previous answer. Today, I love, startups which are able to build something which is on the sustainable, purpose-driven.
Okay.
So I would love such startups. For example, it could be in the world of apparel.
Okay.
It could be, in the world. When I say apparel, I mean clothing. Okay. It could be, in the world of utensils. Okay. In terms of what you can bring as sustainable. Okay. So what I'm trying to tell you is that if there is something that is able to make this world a better place for us to live, I think that is something that will be so closer into my heart if a young sort of founder does it. But having said that, I think there are other areas one should look at, and that's where technology comes in. My interest would be if somebody is able to get into the artificial general intelligence. If somebody probably on a later on date, can even get on, with the super AI, because today even LLMs have become commodity, the large language models, and without the use of a co-pilot or a chat GPT, I think our world will not be complete. And I've also found that today's generation, which is the Gen Z and the millennials, and probably alpha and betas or whatever you want to call, I think they prefer to be alone. They're not lonely, but they prefer to be alone. Okay. So aloneness also means that they want to think by themselves and want to do something through their own initiative. Probably don't want to add other team members as they progress. So you have to give them that space, and if technology is able to offer the space, I would be super excited. And finally, because we are living in a world where I think our ability to live in this world is only increasing day by day. Which means medicines or or the hospitals which are helping us with much more better cure. I think it is only increasing the age span. If that's happening, why not focus on, as I said earlier, on the health and wellness space? Because all of us want to feel good. All of us want to be ourselves. There's this beautiful phrase that you have to be yourself. You don't have to imitate just for the heck of the world. If certain youngster is able to come up with a startup that meets some of these criteria, I think that would be wonderful.
Okay. What are some habits or mindsets young entrepreneurs should build early?
If you speak about entrepreneurs, I'll again go back to what I said in the beginning. I think you should pick your passion. It's very, very important. And the second I said is you have to enter the dragon, which means you have to plunge, and ensure that you're able to progress with your entrepreneurship. The third important is there'll be a lot of these negatives, that we keep hearing. You have to nullify the negative.
Okay.
Because the world will always want to say no to an initiative. But how you overcome is where the entrepreneurship, is. That's why I say that entrepreneurship is more like, a video game. Have you played video games, Mustafa?
Yes.
So in a video game, as you know, the next level is always challenging.
Yes.
And I've always believed that the moment we master one level, we unlock a new level, we unlock a new challenge, but we have to become a new you.
Yes.
So that we can face on the challenge. And therefore, one of the important things for me is that there'll be a lot of negativities, but how you nullify the negativity is very important for entrepreneur. Then, as I said, try. So I'll say this: try and fail, but don't fail to try. So it's very important, that you believe in the ability, to keep moving progress. And probably this is where, I will, borrow, the words of Thomas Alva Edison. As you know, Edison failed, for the 10,000th time in terms of creating the bulb, and even his friend mocked him. But at that time, Edison said something so beautiful. He said that I've not failed, I've discovered 10,000 ways that won't work. And then he said a next statement, which is very, very important. He said, every failed experiment is one step closer to success. And I think, Mustafa, this message is for you and me. Every failure is one step closer to success. That's why I keep saying, that most of our life's failure is because of the failure to realize how close we were to success when we gave up. Because unfortunately, our greatest weakness isn't giving up. And I think the most certain way to succeed is always to try just one more time. And I think that is what, for me, the word try is closer to my heart. When I said risk-taking ability, because unless you take risk, life cannot progress. In fact, the greatest risk we have in life is not to take the risk. Because the person who does not take risk has nothing, is nothing, becomes nothing. That's the value of this risk-taking ability. When I say risk-taking ability, take calculated risk. I'm not saying, just go blind and take some risk. Then for me, this resourcefulness is very, very important, because to me, resourcefulness determines how good the entrepreneur is rather than simply relying on the resources. Because the resources are always going to be scarce.
Yes.
Despite that, how you move forward is something that is very, very closer to my heart. Then, as I said, express your vision. Because if you're able to express your vision from the top to the bottom, I think you'll be able to lift people in a much more better way. That's the power of the vision. And then I would say embrace the now, because you have to stay in the present. You can't think and live in the past. You can't be simply daydreaming about the future. I think living in the now gives you that ability of embracing what is happening at the moment, and therefore how you can become better in terms of what's happening now. Once you have done this, I think what is important for me is to understand, the customers, because end of the day, as I said, building great products or even services begins with knowing the users. If you don't know the user, what's the point? So understand the customer. Then evaluate the investment options, because as an entrepreneur, you have to be looking after the next money, what I call as vitamin M, money. You have to keep looking at the next money, because that's what is going to help you scale, because there are very few businesses that bootstrap. There are very few businesses which are able to rely just on the money that is coming out of the business. You have to rely on a debt or sometimes even an equity. And then I think what is important for me is to ensure that you're able to network. Because this is where I say network is your real network, because that shows that you're able to connect with people in a better way, but also people with ideas, people with opportunities. And finally, reassurance. Because things will go wrong. How always keep telling yourself that I'm going to win. And therefore, I make this statement always to myself: I may not win immediately, but absolutely and definitely. So I think for me, it is not about immediate, it's about the long term. And therefore, the reassurance is very, very important. And if founders, entrepreneurs, look at some of the qualities which I said, I think it'll be very useful. Mustafa, the first letter of each of the words I told you, if you jumble them, you'll get the word entrepreneur.
Yeah.
So that's why I'm trying to tell you that this is so important for one to understand, because this is something I keep telling myself also.
Okay.
Because I'm also an entrepreneur and I will go through my own emotions. So whenever I go through emotions, and whenever there's a no, I tell myself nullify negativity. Whenever I feel that I'm lazy enough, to even make the next attempt, I say no, try. Because if you don't try, you will not move ahead. The secret of getting ahead is getting started, which means it begins with that effort. That effort is called try. And I think that would help the founders in a much more better way, because it has helped me a lot.
Okay. Do college degrees matter anymore if someone wants to succeed in business or startups?
I think to me, a college degree does give a foundation.
Okay.
It also helps in the network. But if you personally ask me, it's not the only thing that really helps. Okay, this is my view. Why am I saying this? I think today's world is all about understanding how skillful you are, how good you are with the execution, and how adaptable and flexible you are. And I think if somebody is able to build these qualities, that's very, very relevant. So if you ask me what do I look at a youngster, if I see in a youngster that the youngster is able to solve problems, the youngster has got the tenacity to build relationship, but more importantly, the youngster is also able to solve problems, able to ensure that they're able to deliver results. I think that matters a lot. So solving the problem, building the relationship, delivering the results is something that is going to keep me always excited. Why am I saying this? I think personally I've realized that if we have the drive and curiosity, we can learn anything.
Yes.
So therefore, college degrees are important in terms of probably giving you the introduction. For example, my own qualifications. That helps me, from an introduction angle. But then ultimately, you want to know what I've done, right?
Yeah.
What I've done depends in terms of how skillful I am. My ability, on the execution side. Probably, how adaptable I am. How agile I am. I think that is what matters a lot. Is my personal view.
Okay. If you had to start all over again with nothing, no money, no connections, what's the first thing you would do today?
I think Mustafa, I've said this many times, network.
Okay.
I think network is the real net worth that we need to build. So I will take action. I will stay persistent. I will keep learning. But I will do this all around the fact that, I need to network better. So what is networking? To me, I think networking is all about, first of all, building your relationship with people. Because once you build relationship with people, you'll be able to understand how both can work towards a common objective. Second for me is you can even develop the skills, because you don't have to learn it by yourself all the time. You can understand the skill from somebody else and therefore learn faster also. So I think that again helps me in terms of equipping myself much more faster. The third for me is, I think networking gives you visibility. And when you are visible, you're under that much pressure. At the same time, you're under that much happiness that people are looking up to you. Pressure because you have to deliver. Happiness because people want you. But I think that visibility is something that is extremely important for one to progress in a much more effective way, probably even in a faster way. But what networking does is probably it gives you collaboration opportunities. And I used to believe earlier that R&D is very important, which is research and development.
Yes.
Probably it is true, but over a period of time, I've realized it is C&D. Can you collaborate and develop? So I believe that if you want to be part of an ecosystem, I think we need to coexist. And that is something that networking is able to offer in a much more better way. And then if I have to end up, I'll also always say that. And if I have to end up this beautiful aspect of networking, I think I'll say that networking gives you emotional support. What it does is, let's say when I know you very well, I think I'll open up my heart. And because I'm able to speak to you much more freely, I think you'll be able to offer your support in a much more better way. So this is what networking does. And therefore, if you ask me one skill set, which I wish I'd learned much more earlier, that's networking.
In one sentence, what's your definition of success?
Mustafa, very interesting. It is not one sentence, unfortunately, because it's such a beautiful word. A word, that we need to always, keep closer to our heart. Because success speaks louder.
Yes.
So to me, success is not a destination. It's a journey. And we all know that this journey is not straightforward.
Yeah.
What is important is to understand the approach to the journey. Because that is what success is all about. Which means success is a process. And if you're able to understand the process better, we'll be able to appreciate the process and therefore we'll be able to be happy about this journey.
Okay.
Because the journey should always be giving us the happiness. And that's what success is. And therefore, success is nothing more than few disciplines practiced every day. Can you be very, very religious and true to the disciplines, that you can practice on a everyday basis? Because I said every day, which means that success is a daily thing, not a destination thing. I said success is not a destination but a journey, which means success is a daily thing, not a destination thing.
Yeah.
Which means the secret of our success is dependent on our daily agenda. What are we doing on a daily basis so that we are becoming better? I always say that we are our best competition. I always tell myself, can my today be better than yesterday? Can my tomorrow be better than today? And therefore, on a daily basis, am I able to, even look at myself and then become better? That is success for me.
Okay.
Which means success is neither magical nor mystical. Success is the natural consequence of consistently applying the basic fundamentals. And this is where we are missing out, Mustafa. We know the fundamentals. We know that we have to do on a daily basis, but sometimes, we miss out.
Okay.
Which means success is an outcome, of processes that you follow on a daily basis. Because if you do it consistently, and probably if you do it even tirelessly, I think there is a greater way to succeed. And finally, to me, success always happens because of two things. I always say this. One is the vision of seeing the invisible opportunities and the mission of solving the impossible things. And if we are able to do this together, I think success is something, that will come and kiss our feet.
Okay. Okay. So that's it, sir. Thank you so much.
Thank you so much, Mustafa.
It was,
Loved the conversation with you.
Thank you. It was an absolute pleasure having you. I'm sure our audience is walking away with a ton of value.
Thank you so much, Mustafa. Grateful for the opportunity.
Thank you so much.